Hey, welcome everyone to our Pellegrini Financial First Quarter Market Video Update call. The first one for 2023, anyways. And so right now, it's we've been certainly experiencing at least more positive market than we did in 2022, of course. Obviously, the start of Q1 was really the bulk of it was in January. We had a good start and a good run for the month of January. Following months, really, we haven't had a whole lot of positivity or negativity. It's been a pretty flat market, and I kind of mentioned that in the last call. I guess is more of a wait and see approach kind of market, and that probably hasn't changed much even till today. So certainly we'll get into more of that here in a second. When we look at the markets in general, really across the globe, we've had a lot of good positive returns, obviously, to start with. Year to date numbers, TSX in Canada up a little over 3.5%, 3.6. But as a whole, led by the NASDAQ down south, which is the tech heavy, large cap tech heavy stock market. And so that had a good start to the year. Granted, that was one market or index that probably suffered more of the losses in the previous year. Euro stocks, of course, up to start quite well. Again, coming off a pretty tough year in 2022. When we look at the Canadian sectors in particular, there, really what we're seeing there is again the sectors led by information technology or technology, which has been the strongest performer on a year to date basis. Mostly all positive again, the exception being energy at the top, which was down to start the year. And energy did have a bit more favorable year in 2022, so perhaps that's a bit of froth coming off the top to start. Although I'd still expect energy to be a good performer through the calendar year in 2023. Um, when we look at some of the GDP growth factors, this is again US specific to the left hand side here, that bar chart that shows basically trending down, obviously, first off. But also, where we get into Q2, Q3, good expectation that it's negative economic growth and good likelihood that there is a technical recession. We still may end up the year with positive growth, but probably experience that technical recession. I expect that to be the same in Canada. When we look at some of the world economic growth numbers there, again, as a whole, probably the thing to take away from that is the fact that they're all trending downwards. And so 2023 is certainly going to be a lower output across the board. Probably what isn't shown there maybe is some of the Asian economies, which is likely to be what leads 2023. And when I look at some of the bigger economies, certainly out east, you look at China, you look at India, those are probably two of the bigger nations and economic growth engines for 2023. And it's certainly starting off that way from what we see so far. When we look at some of the Canadian employment numbers, well, again, two things. I think the first chart there on the left is certainly the participation rate, again trending upwards, which is good, but also quite high, and then that's a very positive sign. Again, we've talked about employment lots, obviously. There's still a strong demand for workers, and trying to find those bodies has still been the struggle. On the right hand side there, that's just again an unemployment rate which is basically held steady at 5%. um, you know as a whole, I guess you can argue how much of those employment numbers have been hired by public services versus private sector. Um, Either way, I think the thing to take away from that is the fact that while people are working, if we do experience a recession, which is all again very likely that we do, uh, most people won't know, right? If they're working, they're spending, they're working, they're living their lives, doing their thing, and if there's a technical recession, they won't even know about it until after it's been passed. So we have seen a few layoffs here and there, but it's going to take a lot of mass layoffs before that, I think, picture turns around. So right now, that's a strong picture in regards to employment. That's a good thing. Um, when we turn to inflation here as a whole, of course, we've talked as inflation generally as trending down. It certainly has been. Obviously, there's a number of components within inflation that can be measured in different ways. This is specific to services, and services is one factor that is important to the Federal Reserve or Bank of Canada and so on. Again, the bar chart here is kind of a shorter term trend of services related inflation. The chart on the right, the line graph is again longer term, and you can see the trend up from 2021 all the way up to 2023. And while it's flatlined and come down a little bit, it has been stickier in that sense. And again, that is more of an important one that the banks will certainly watch for, central banks and the Federal Reserve and so on watch for, and do want to see that trending down a little further and faster than it has been. So again, just wanted to kind of point out a bit of the stickier elements of inflation factors. When we do look at interest rates, again, obviously, we went through 2022 with nothing but a series of boom, boom, boom increases in interest rates. Obviously, and these two charts here kind of show that. Again, the top one, Federal Reserve, is a bit more shorter trend, but now they're about 5%. And so again, raised rates again more recently. The chart below actually shows the Bank of Canada rate, which now has held steady over the last few months. And they are kind of a now on a hold basis, I guess, and waiting for the interest rate hikes to bite into the economy. Obviously, the intention of raising interest rates is to slow economic growth, obviously to tame inflation, and those things take time. At the end of the day, you will probably need 6 to 9 months of time to go by to really start seeing some of those economic factors be impacted. And so while the Federal Reserve down south has done another increase, the Bank of Canada has held steady. And I think that will continue on for the time being. Is there a chance of another rate hikes? For sure. Um, is there a chance for rate cuts by the end of the year? Perhaps. I don't really see that until maybe perhaps 2024, but time will tell. When we look to commodities, this time around, kind of looked at something more closer to home. Top being WTI oil prices, and where we kind of experienced for first in a while, anyways, was 4 consecutive weeks of positive growth, and that's a good thing. The bottom chart is not so positive. That is the natural gas price. In 2022 was a good year for natural gas, but for 2023, it started off negatively and carried on that way, basically down to maybe what has been perhaps a longer term floor over the last at least 4 or 5 years, anyways. And at this point, obviously, we're in a shoulder season as well, so certainly not much opportunity for natural gas to uptick anytime soon. Obviously, when we get into the summer season, depending on the weather, that can change, and you can see certainly demand increase. But for natural gas right now, 2023 has not been a good year for that. When we look at some of the currencies, and really all I did this time around was looked at the US Canadian dollar specifically. For the most part, we've been range bound with the US dollar for probably the last 9 months at least or more. Maybe for 2023 trending a bit more favorably to the Canadian dollar. However, I do see the US dollar remaining strong globally. 2022 was a strong year for the US dollar, and I don't think much has changed to really change that outlook in regards to the US dollar. Obviously, if economic factors turn more favorably and positively through the year, well, then you might see the US dollar weaken a little bit. But again, it's still a safe haven currency, and certainly it's in a strong global position and remains so, and probably remains this way for 2023 to start. On the right, just a chart of gold. Haven't really talked much of gold lately over the last while. Just thought I'd throw that in there. Again, it's not a currency per se. Obviously, it's kind of reached a more recent peak that it's encountered over the last few years. And so while that's kind of a flat performance metric, I suppose, for 2023 itself, gold has been a good performer to start the year. Um, when we look, I guess, going forward, where do the markets sit? Again, I've already kind of mentioned, but it's probably still in a wait and see mode. Wait to see what depth of recessions are we going to have, because it is probably happening. When we look at interest rates and inflation, well, how much of that inflation continues to trend downwards? How much of it remains to be stickier? And does that cause for another rate increase, right? And so markets probably don't want to see any more rate increases. But if inflation remains stickier in certain components, well, Federal Reserve, Bank of Canada still might raise rates. And so again, they are focused on inflation first, not on economic growth. And so that obviously has a risk of saying, well, recessions could be deeper and longer if rate increases do happen. Again, it could be where by the end of the year, early next year, we could see rate cuts. Obviously, we're not there yet. And I think the other factor, I guess, that plays into the wait and see mode to some extent is it does pay to be on the sidelines to some extent. We've seen certainly a lot of money movement into money market and high interest savings type of accounts because they do pay. It's not exceptional by any means, but um, it's not negative rates, and that's where we were a year ago. And so the nice thing with that is the fact they can sit on the sidelines, be paid, and be patient. And I think that's probably the key word there is be patient. And so, at this point, I say markets are, like I said, in that wait and see mode, and they're going to factor in how these different factors play out over the next few months. And so, really, again, have not seen and expect any major moves one way or another. And maybe it's a bit of a boring market. Maybe that's not a bad thing after what we had in 2022. So I'll leave it at that. And thank you for joining us and look forward to our call in Q2 in a few months' time. Thank you and bye for now.